Hey traders, welcome to the double shot. It's a little bit past 5:15 here in Chicago, and we're on the 16th of November. This is going to be the last video of the week, and I just finished writing up the note, and I just kind of went a little bit over some longer term counts, and I wanted to spend a little bit of time tonight and just discuss also the bearish the bearish charts in here, to just kind of go and see what makes sense on that side of the market. We haven't really been touching on that too much. So, excuse me. So let me just run you through kind of what I'm thinking here. We'll go through the kind of main indices. We'll take a look at Bitcoin too, just a little bit of gold and yields as well, just to kind of see where we are. So it's just a rough idea, as a simple thing. We're thinking that wave 4 completed up here at 4100, and then from here we should be beginning the larger fifth wave. Obviously there's got to be a second and a third and a fourth and a fifth to complete this 5 of a wave minute 1, of a wave minor 1, and that's the first wave of, let's say, a larger intermediate wave 3 that's still got to develop. So that just kind of pulls us higher into the sequence, as the years unfold. So, pretty strong impulse in here. We've talked in numerous videos about it. I made a separate chart into the note too, where I'm looking at this move in here as a left shoulder, then this pullback as a right shoulder. It's almost like an inverted head and shoulder, a continuation pattern that happens after this correction that started back in July of this year. And once you do this right shoulder back to the trend line, back to the neckline, then you can start to break higher. So that's on the S&P 500, and we're stalling here below 4540 zone, and I'm continuing to kind of hunt for this. Now, if you look at this move, this is pretty sharp. So every time I get a sharp move near a B wave high, I'm always wondering about an X wave approach. How could this happen? So let's go and take a look at the other counts in here that, I made a video on YouTube a while back, and I think I presented this even to you guys several times, not that often, but it was the idea that this, counting this as a B wave rally and then looking at this as a 1-2-1-2, and I said, well, if it is a 1-2-1-2, then we need to crash, and the bears, have to prove this by literally crashing this market lower in this large turn. Now it started, pretty interestingly in here, but then, we observed all those other indicators that were telling us that that's a stretch, and how this level is likely to hold, and we kind of turned back to the upside. So this 1-2-1-2, it's really not viable unless you want to force the count by pushing a wave 2 up here, and then just looking at this as being some kind of a flat in a wave 2, but it's a much larger wave 2 at a lower degree than the higher degree wave 2, so it makes no sense. So the only way that this can still be somewhat of a still have a bearish tilt is if you're aggressively counting this as a 5-wave decline. This wave 2 moves up here, this wave 1 shifts at the lows, and this gets counted as a leading diagonal, since you have overlap between 4 and 5, but you do have what looks to be a 5-wave structure. Then this is a very sharp wave 2, near 80%, 90% of this entire decline, which rarely happens, for a wave 2, I guess. It's maybe much more common, when you're coming from the lows. Again, I'm not completely dismissing it. I just would be very surprised if this is, what the market would really go for in here, right? It would be a total disaster if this rally, imagine, right? They killed all the bears by dropping in here and rallying higher. Now they're getting everybody bullish and making the bears give up through these 2 moves in here. And, imagine if you're turning from here and you're breaking lower, and I don't think anybody would expect such a strong move lower. So that would be one way to continue to kind of stay on the bearish narrative, and I did not put that into the note, but I just kind of wanted to keep it for the video in here. So that would be on wave A, up in B, and then another 1, 2, 3, 4, 5 to complete lower wave C of a intermediate wave 2 at a larger degree, and then you begin the rally. So I don't know how really well to count this, right? Unless you're still keeping the leading diagonal and you allow for this wave 2 to travel like this in another A, B, C, and it needs to get bigger by that time, since wave C would kind of have to get above the wave A, it would be, in my view, a bit forced. It would have to be something like this, and then up into this move, and then break lower like that. I just don't see that as being, I do not see that as being appropriate. So let me see if I can get rid of the drawing. Okay. So we'll keep it like this, and under these conditions, this would have to be an A, a small B, and an up in C, and then crash from there, right? Again, very tough, but listen, we've had rallies before. They were better, they had a better formation in here, right? You had a proper B wave, and in here we really don't have that. Okay, hey kitty. My cat is here again. All right, so now let me just, she sits behind my laptop. I guess she likes the heat that's there. All right, let's, by the way, her name is Elvis. Let's take a look at the Nasdaq too. I don't know if I really spent time on this looking at the bearish count, but the bullish one, it's on here, and the only modification that I've made to what I've been thinking so far, and I'm still keeping that as a probability, is that 1, 2, 3, 4, and we've had this as a wave 1 and a wave 2 of this fifth wave, right? This fifth wave to be traveling higher in a 1, 2, 3, 4, 5. So I'm still keeping that as an option, but I am aware that it's almost equal with the wave 1. I mean, it's got to rally close to new all-time highs to kind of get more towards equality, but literally after you break this third wave without, you don't have to, because you can have a truncation, but if you do break above that, you can satisfy the requirement for a fifth wave. You could be done, and then you can actually begin this fourth wave at this minor degree and then go higher. So either way, either as a wave 1 of 5 or as a wave 3 completion followed by a 4, you're still looking at some kind of a pullback happening in here over the next several weeks, maybe a couple of months in the Nasdaq. I don't know how that kind of works out with the seasonality, with some of the cycles, but we got to kind of look into that. So that's one approach there. And then in terms of the bearish, listen, it's hard for me to place any type of a B wave up here due to the fact that you've had this. So this is one market that kind of defies discount, right? It's I don't even know. I mean, you could do ABCX, ABC. You have like a 7-wave move, but that's just, in my view, it's quite a stretch. So I don't think it works, and maybe that's why the other markets would not work, because this one doesn't confirm that in terms of the wave count. But just from a quick glance, I mean, I'll spend some more time trying to, but just from a quick glance in here, that's the only way I could come up with the B wave, some kind of ABCX, ABC, or 1, 2, 3, 4, 5. I mean, you would have to do, or to do some kind of a flat in an A, B, and then this whole thing to be some kind of a C wave, as part of a B and then drop lower. So those two are kind of problematic. Now in Dow Jones, I don't think it's that hard. I'm going to come back to it, but the idea on the bullish side, you already know 1, 2, 1, 2, followed by again a pullback in here and then a break to the upside. But then if we take a look at and you can, I mean, this is just a longer term, like, this is a super disaster scenario, but let's just assume that it's a 1 and a 2. Let's see how that will look under normal conditions. So I'm going to go here, and let's see if I can do this quickly. So at some point we were looking for this to be some kind of a 1, 2. Now we got to delete this because it didn't work. And, even this back here with this B wave is not appropriate. So let me just kind of clean this up. Let me just get rid of these guys. All right, so you could do, some kind of a B wave and then A wave down in here. So again, just a 1, 2, 3, 4, 5 for a diagonal, right? That would match kind of what I have here as a wave 1. And instead of a 2, this would be some kind of a B wave. So let's just go here, make it a bit smaller. Right, and we would go for a wave 2, for a wave C, kind of down here. And then this becomes, since this is pretty impulsive, you would have to count this as an ending diagonal. So if you can count it as a leading, right, you would go for it as an ending, and you would have an impulse in a wave A in here, something like this, right? You go A, 3 waves down in B, and then up in C, up into here, and, have an awkward looking leading diagonal. Just kind of, we would anchor it right up there, and then this is a 1, 2, 3, 4, 5 for 1, and then, this becomes a 2, and then you do 3, 4, and 5 for this wave. Let me just push this. I just want to kind of properly anchor these guys. And it might not get that deep. You can do some math between the length of the wave A and the length of the wave C, find out a little bit of a fib, from these lows in terms of what a 61.8 would come, and that's roughly at about 24 to 25K for, okay, now I screwed this up a little bit, but let me just kind of pull this wave too, just so we don't overlap. Here you go. I hate when things are not that clean, but let's see. Let's just kind of calculate a C wave. Alt C. It's about 27,647 is where we would have equality. So we'd have to pull this, just slightly higher. And that would be a wave C of a wave 2. Now imagine if this happens, right? That would be, definitely consider a very strong bear market, in a C wave, and could take the entirety of 2024 to kind of get that going. So, I'm happy that we kind of gone through this, because, now I can keep them here saved, and, we can refer to them once again if for whatever reason, this thing here starts to fall apart, and that's just a simple ABC. And a very deep one, and then you're starting to kind of crash in a larger third wave. And then in the Russell, I already prepared it, and that is this one in here, I think, is the one that I looked at, right, as a WXY. Forget these, just look at the 100% in there. Let me see if I can stretch this out, and there's a Y wave right in there. There you go. So you can see it, right? WABC in here for a W, then triangle in X. You can also do an A and B and the C, just like in the DOW, in a 1, 2, 3, 4, and 5. So either way works, right? It's still a corrective move kind of coming down. You can also do as a complex move, ABC for a WX and then AB. And the only reason why I'm looking at this is because of this simple 3-wave corrections, and that gets a little bit better qualified as a B wave. Otherwise, under the bullish count, guys, you got to go with the 1, 2, 1, 2. If this wave C is done, like I've said, right here with this little drop, then this is a 1, 2. You got to do a 1, 2, and you got to continue to go and break above these guys up here at about 2,000, at about 2,000 in the Russell. Okay, because we satisfied the move, so we broken below this A wave low. It's a very awkward and short C wave, but if it's finished, you gotta go in some kind of an impulse and break this and continue to go, right? Otherwise, we gotta revert back to I guess that would be the other one, but we got to revert back to this guy back here. So we'll see. I mean, if we're falling below, even if you're falling below this wave, right? If you're falling below this guy right here, 1690, which is the B wave of this ABC, chances are that you know that you're going to continue lower, and you know, I think if that happens, you're going to start to confirm the other indices too, and that's a big red flag on the market. All right, so that's the Russell, and then really quickly, I'm just going to touch on yields because those are important as well. And I think I've looked at a weekly time frame in here that I posted. I think, you know, I'm looking at this as a truncation move to the downside in terms of the way we kind of developed here in a, you know, 1, 2, 3, a fourth wave and a fifth truncated, and then we went back in an impulse in a 1, 2 at the primary degree, or whatever degree you want to count, 1, 2 intermediate, so 1, 2, 1, 2, 3, 4, 5, 4, 3, 4 in 5, for a 3 primary down in 4, and then you have a final fifth wave that could still have one more push. I'm not dismissing this being a slight correction, although it looks impulsive on a lower time frames, and that's what I put into the notes. But if we're done, and you know, let's see, do we have a trend line violation yet? I could argue that, yeah, you could argue that maybe it's already done. And you know, if it is, then you're going to come here in some kind of an ABC, you know, or maybe a larger impulse. Who knows? Maybe a wave A, then a B, and then a C. But the targets are near 325, right? So we're trading 445. I don't know if the markets will push the Fed to cut all the way down. We'll see what happens in January, in the December meeting, then January, February. But those will be some kind of an initial targets into this, let's say, rate cutting cycle next year, and then maybe even drop below that. But that's the idea on yields. And then really quickly, let me touch gold, and then I want to go back to Bitcoin. But the larger count in gold, it's this, right, where we would have, you know, this, we dropped in this cycle wave 2, then you have your 1, 2, 3, 4 intermediate, then you have your minor 1, 2, 3, 4, and 5 for a 5 for a wave 1 primary. And you know, that means that this, it's a second, some kind of a second wave pullback, and we got to go in 3 of 3, then 4 and 5. You know, at some point we're contemplating that this wave 5 actually intermediate would be actually done right here, which, you know, which might still be the case as a truncation, but the move from here down, it's a corrective move. So for all intents and purposes, I think gold is probably telling us out here that, let me just hide some of these waves, that it is, you know, that it is ready to go to the upside. And if that's a third, you know, we're not stopping until 2465, 2500 in gold. So very important, you know, if this is some kind of an X-wave failure, you know, you could still get ABCX, ABC, and still develop this wave 2 to the right over here, and then go. I mean, but there's been so many false starts, right? It frustrated a lot of traders. So maybe now is the time to go with the dollar dropping. And if you want to take a look at the dollar, I think you can. I think I put it up here. You know, if you take a look at the monthly time frame here on the dollar, you will see, you know, kind of as I'm having it labeled with the final fifth wave here in September 2022. I think 27 or 28 of September last year, we reached these highs, then we dropped in a pretty decent impulse, and we're doing some kind of a B wave, which could still be developing, maybe towards 107, 108, and then drop again in a larger C wave. I don't know if we're actually ready to start dropping just yet. Maybe there'll be a bit more proportionality here, but you know, it would mean, you know, a flush lower in the dollar, a spike up in gold, maybe a cut in rates. There could be, you know, some kind of a macro cocktail happening here, and that could be, you know, definitely very interesting for the moves going forward. And then, you know, lastly, I just want to show you Bitcoin in here, and you know, I don't really show this a whole lot, or, you know, because we were just focusing from the move from these lows, but at a larger degree, I mean, if this is a wave 1 cycle and a wave 2 cycle, you know, then this is your 1 primary, wave 2 primary, and then you have your intermediate degree 1, 2, 3, 4, and 5, and you know, you have equality between, I think, between this wave 1 and this wave 3 at about 256,000. With the halvening and with all that, it's probably that you could achieve that over the next several years. And you know, I mean, it looks good. This was where, you know, everything crapped the bed, right? With FTX, with Celsius, with you know, who are the other ones? I mean, all these companies that collapsed, and then, you know, that kind of, there was a low in here. Then we had a final collapse to the downside, and then finally we recovered. I think it's a pretty decent flat right here in a wave 2, which we've talked about, inverted head and shoulder, bearish to bullish reversal in here in 1-2, and then we're in the initial stages of this larger wave 3 to another 1-2 that's probably getting formed, and then a big spike in a 3, 4, and 5. So that's the idea here in Bitcoin, and you can follow my work daily on the on the newsletter up there in the smaller time frame. I talk about it in the daily videos too. And again, I'll probably get questions with this wave 2. I mean, yeah, you can place it here if you want, and you can do this as a 1, 2, 3, 4, and maybe a 5th wave in here. It wouldn't change much, right, the picture. And then you would place a wave 1, you would count this somewhat corrective, wave 2, and the idea remains the same. So I would not really worry about the placement of this wave 2 especially, or the top of this wave 1. It really doesn't make a difference. It's a very small spike, just a slightly spike higher than this high was. So I guess this covers it. Hopefully this was helpful, and let me know if you have any questions or anything. You got my email, and I'm on Twitter. Obviously you guys have me in the chat there for anything, so on Substack. So thank you for watching, everybody. I appreciate it as always. Thanks for tuning in all the time, and I'll talk to you later. Bye bye.